Hello and welcome to today's episode of the Daily Exchange. My name is Harry Tucker. On today's show, we've got Bitcoin has broken through 7,000. Woo! Ethereum's over 500. But what's going on with Ethereum's transactions fees? We're going to talk about Tether and stablecoins in general. Are we going to HODL versus rebalancing your portfolio? And goodbye to Kodak's KashMiner. We hardly knew you. Plus having a look at crypto social sentiment. All that and much more is coming up right now. Our dramatic week in crypto continues. Can you feel that momentum? Now it's up and to the right across all digital currencies pretty much in the last 24 hours. So let's get straight into what's happening right now and why that's happening. Now, Bitcoin is up 10%, crashing through that $6,800 resistance level that it's been sitting under for the last few weeks, and almost took on 7,500 at one point there. The spike kicked off on Coinbase in the US afternoon, and Bitcoin surged nearly 700 bucks in the 30 to 40 minute period after that. Binance even went down briefly. Like, that's pretty huge. A bit of volume has to crush there for Binance to be taken down like that. Now it's sitting at about $7,321-ish around there at the moment, according to CoinMarketCap. But let's take a look at TradingView now and see what's going on there, and have a look at some of the candles and compare it to a few things that we've seen in the last couple of spikes. Now, as you can see, if we look here, so this is the spike here. Oh, wrong way. And here, sorry, crazy. This is our spike we're currently in here. So this kind of, we've gone down to this level here, about that $6,100 level, and then we've come up, 7,466 bucks, and this massive spike here. But as you can see here, the last time that these Bitcoin prices have surged by these levels was on April 9. So if we go back a few months, and we look here. So here we are, a very similar type of spike. And where it hit 7,000, almost to 8,000. And if you take a look in the days and weeks after that, Bitcoin rallied all the way up to that $10,000 mark. Will Bitcoin take on $8,000 next and test that $10,000 again at some point? Again, always isn't trading advice, so I'll have to let you draw your own conclusions. But it's worth thinking that when we get to that $10,000 mark, is that a psychological, is it something in people's brains and something that says, okay, this is a point where we struggle to keep above it, similar to 20K back in December? And because psychological marks are always probably one of the most important things when it comes into the crypto market, or sentiment and these psychological things. And I think sometimes these can be actually more important than, technical analysis and things like that, because predicting how human behavior is often much harder than looking at a spreadsheet, which can be directly correlated to that. But what are the reasons behind this sharp rally? Now, some analysts are suggesting that it may have to do with some Bitcoin shorting against, some traders shorting against Bitcoin's $6,800 resistance. And the truth is, it's hard to pinpoint one single factor. For one, there's certainly an increase in positive sentiment around crypto after recent news that Coinbase got the SEC green light to list security tokens. However, it's actually just saw this morning that the SEC and Coinbase have come out and said that that is not actually what's happened, and there has been no official green light. This was an interview to Bloomberg. This was just very recently, just a couple of hours ago that was said. So they didn't say that it's not happening. I just think how Coinbase worded it was probably jumping the gun a little bit there. So it's not completely bad news after that, but the initial good news certainly might have helped it. Some other good sentiment was just last month, the current investment bank of Goldman Sachs Current CEO said he was looking to add more crypto services to its offerings. The New York Times has previously reported that Goldman Sachs may be preparing a Bitcoin trading operation themselves. Now, one of our crypto journalists here at Finder has also noticed a fascinating correlation that someone brought huge amounts of steam and strat with Korean won on Bitdump, causing those coin prices to multiply in a very short period of time. These happened in the hours immediately before Bitcoin's sharp rise. Someone then started dumping steam and strat exactly when Bitcoin's price started to rise. And then Litecoin creator Charlie Lee had his own tongue-in-cheek explanation for the spike. Earlier in the day, he offered some surprising advice for the Litecoin faithful. Now, if you look there, he says that there will be at most 21 million Bitcoins in existence. There isn't even enough Bitcoin to go around for every millionaire to own one. So before you buy any other coin, Litecoin included, try to own at least one Bitcoin. Once you have one Bitcoin, buy all the shit coins you want. And then the spike happened. And of course, Charlie Lee claiming it that he tongue-in-cheek, that it was his tweet that could have propelled it. But seriously though, it's definitely a positive sign to see this rise supported increase by clear increase in overall volume. Now, if we look at the volume on CoinMarketCap here, and if we zoom in a bit more, a bit closer, yeah, let's go about here, I reckon. You can compare the volume that's been traded from earlier, from 1 day ago, which is, here, bring this one. So in the last day, there's been roughly, the volume is, looking well over the 18 million, almost 20 billion, I should say, volume that's being traded in the last 24 hours. But if you look back in the last 3 months, especially in the weeks before that, there's been some significant drops there in volume. So just last week, on Sunday, our volume was at $9,385, as compared to where it is now at about that $20 billion. So these are definitely some signs that's coming through with the market cap. The market trading volume and how that correlates directly to the price itself. Now, the crypto market cap was at about 272 billion 24 hours ago as well, and now it's closer to 294 billion. And it's about the most volume we've seen since early to mid-June. And you can see this reflected in these charts. And you also see that most of the volume came from Bitcoin and not so much ETH. So this is the market cap excluding Bitcoin. It's seen a bit of a rise, but yeah, the market cap there is still mostly Bitcoin. So this is another indication as to what was going on there, and those volume gains that might have brought up much of the price rise here. But personally, I got my own trend, and it's probably as accurate as a lot of other trends that people are. Why I think this has happened is probably as accurate as some of the other stuff that you see thrown around. And it's simply Franco, who works in the Finder office. When he wears a beanie, the price seems to go down. When he wears a hat, we bull run. So I feel like he might be the oracle here with his headwear as to what happens with the price of Bitcoin. So who knows? But we want to look at some direct trading trends. Let's start with Ethereum. Back in May, Ethereum looked to be slowly but surely eating into Bitcoin's market cap dominance. But that's certainly not the case right now. The so-called flippening isn't likely to happen anytime soon, especially with Ethereum facing competition from projects such as EOS and Neo. But anything can happen in crypto, and maybe some massive Ethereum decentralized application will begin to rewrite the landscape. In fact, if any developer activity on one potential indicator of future price trend, then Ethereum is leading the way right now. Now, Augur, the Ethereum-based decentralized platform for prediction markets, has certainly been on a tear. Its transaction volume now exceeds 1.5 million just 1 week from launch. Now, let's bring up this chart here. Now, if we look at the chart, this is to do with fees and sort of scaling issues. So is Augur's success causing scaling issues, and is it part of why Ethereum's transaction fees have overtaken Bitcoin for the first time recently? So this here is comparing, if we look at the charts, I might zoom in a little bit for you. I'll try full screen even. We can have a look at, so the red line up the top there, that is Bitcoin. The purple line is Ethereum. And so just about here at the end of June, we saw Ethereum fees overtake Bitcoin, go dip a little bit, overtaken's dipped a bit there, but it seems to be pretty, looks like it may stay over that for the time being. But making it more expensive to run scripts and smart contracts, this is what fees are doing to that. Perhaps it's more related to ongoing claims, though, that there's an active spam attack against Ethereum to artificially raise Ethereum network fees. Now, it's all speculation, of course, and there's an article on Finder that dives into certain claims. But here's what Ethereum co-founder Vitalik Buterin has to say about the situation on Twitter. Now, according to my estimates, the recent transaction spam on the ETH network cost up to $15 million US, which he compares to about 75 Lambos or almost 1% of Telegram ICO. Free market principles prevent me from being too upset at someone using the ETH blockchain as they wish, but wow. Token politics aside, Ethereum has cracked through 500. It's currently at 503 according to CoinMarketCap, and that's an over 5% increase in the last 24 hours, hot on the tails of Bitcoin. Over the last 3 months or so, ETH has been following a pattern. It trades within a narrow range for a few days, and then the market makes a move around it. For most of the last 3 months, those moves have been downward. But for the last 2 weeks, we've seen the price hold within a narrow band and then a rise. And while trading volumes remain relatively low, we are seeing more bullish traders test the waters at higher levels, rather than the dips we've seen where the bears have been in control. As with Bitcoin and pretty much the entire crypto market, a steady flow of positive news and evidence of gradual institution adoption are having a really positive effect on everything in the market. Now let's get back to our trusty heat map that we've got thanks to Coin360. And it shows that if we look at the size of each block here, it reflects the relative market size compared to the rest of the tokens in the market. Obviously, Bitcoin the biggest, followed by ETH, Bitcoin Cash, Ripple, Litecoin, and then all the way down here, there's some tiny ones that I'm not even going to try to read. As you can see, the big gains in 24 hours across the board, lots of green. EOS is back having a tear, which is just must be a sigh of relief for so many people who've picked up EOS there. That's up 13.3%. Cardano's up 14, almost 15% as well. But if we look at ETH and EOS, and if we adjust this heat map to try and do a 1 month performance, that's not letting me do that. It's been a pain, but you have to take my word for this one here. There's a clear correlation that EOS, it's showing that EOS is a long way from the $14 mark it had in June. And Ripple has also been down quite a bit despite being up 7.5%. But we've got a reader question via our Telegram channel to come up next. And the reader asked, jumping in with a point of interest on stablecoins. Where do you think Tether's market cap could move to looking at the chart? So the chart he's talking about is, of course, Tether's CoinMarketCap chart, where if we bring volume Tether, so look at this chart here, is asking what the correlation is between that and how the market cap for Tether works. Now, essentially, what happens with Tether is that Tether, how it creates more money, bigger market cap, is it prints it. Like if you think about it sort of the way that a bank prints banknotes, it's the same way that Tether effectively raises its market cap here by the digital equivalent of printing more Tether. Now, that's supposedly each dollar that's printed is supposedly meant to be then linked to one physical US dollar. There's a bit of, I wouldn't say skepticism, but some people are a bit concerned that maybe not all that physical US dollar is there, which at the moment should be about $2.6 billion that's being held to reflect one US dollar. But there's been no real proof of any wrongdoing there either. Also, to what degree, this reader asked, is institutional volume in Tether? Well, institutional volume involved with Tether will always rely on how the institutional investors are using it to base their pricing on how they value the crypto market. And you also see the other thing interesting you see with businesses, and I guess you could almost call them institutional investors as well, is people looking to use Tether as a reference point to getting around certain legislations around how they can word and refer to fiat dollars without having to require certain financial licenses. So a business might say that we can handle up to we can trade $10,000, for example, in USDT, not USD. So it's expected that the consumer knows that this is essentially talking about $10,000, but it covers themselves. The business covers themselves legally by referring to it as USDT, and in turn as a as a cryptocurrency and not a fiat dollar where they would have to have some kind of financial license. But if you want to have a look at when new batches of Tether are being printed, there's a site called omniexplorer.info. Now on Omni Explorer, it shows all the different transactions, including being printed on here, and it's all available there. So again, that's omniexplorer.info. And you can also, if you want to follow, like blockchain.info, you can type in specific addresses and things like that, and you can follow what's happening. And total transactions, all a bunch of different things there, all around Tether. But if we want to look at other top coins right now, we've seen a new cryptocurrency purportedly backed one-to-one by US dollar deposits like Tether has just officially launched. Now the project is called Stronghold USD and uses Stellar Lumen's blockchain. The stablecoin is the result of a partnership agreement between US-based financial services provider Stronghold and global technology giant IBM. Now, the new coin is designed for use amongst businesses such as financial institutions, multinational corporations, and asset managers, but may become available to retail customers in the coming months. Buyers wishing to purchase the coin will need to deposit US dollars with Stronghold's Nevada-based partner bank, Prime Trust. Tokens will be issued at a ratio of 1-for-1, according to a report released by Reuters. Now, if we want to look at some more trading trends, and a thing that people are talking about at the moment with so much movement is hodling versus rebalancing. And this is the age-old question. Is it better for crypto speculators to hold or hodl, or to rebalance? That is, changing things around when assets have reached their predetermined thresholds. Now, there's an interesting article I'm going to bring up from Hacker Noon on Medium. Now, the article talks about painting a fair picture between rebalancing versus hodling. Now, back in May, a research attempted to answer this question, and the findings from Shrimpy, which it should be noted is a crypto portfolio firm, ran 4 different tests with 5 different test groups and measured results by rebalancing every hour, every day, once a week, and once a month. And here are the results. We'll bring them up for you to take a look at. So by rebalancing every hour, the assets rose 234%, one day 78%, 64%, and 42%. So basically, if you're a very good day trader, you've got some good algos, you could, that's showing that there's potentially a lot to be done in the shorter term versus holding on there. So the median performance for a portfolio was 234% better than to hold. So that's quite interesting there. But again, if you look at the process of how they did it, it's not just simply buying and randomly selling different assets like that. It was pretty meticulously done. So again, not financial advice by suggesting that, but just an interesting bit of information there. And Kodak, the KashMiner, how we hardly knew ye. At the Bitcoin mining machine, which was revealed at CES in Vegas, if you didn't remember that. And it used the Kodak brand name under a lease agreement, and it was going to let people pay $3,400 up front, about the cost of a typical Bitcoin ASIC miner, for the privilege of giving up 50% of the Bitcoin it mines. Well, according to a new report from the BBC, the CEO of a licensee, Spotlight USA, now says the project never really got off the ground. Apparently the US SEC prevented the scheme from going ahead. As always, here's to regulation. A little savior here. I'm going to bring up Solium. Now, Solium is something that, it has a peak around the social sentiment around all the movements in crypto over the last few days. It's one of my favorite tools to look at and can actually give you a really good indication of what's happening in the market, how it directly correlates. as you can see, Bitcoin here, the easiest example, price has gone up 10%. We've seen social volume going up 3%. And its social sentiment score is off the charts, really. And of course, we've seen the uptick there. Likewise, with Ethereum, we've seen the sentiment change and the price directly reflect that. Volumes change with Litecoin and the price has gone up. There are a couple of little outliers here, like Dogecoin. It's down 100%. So I feel like maybe there's a problem in their calculation there. It's weird for it to completely drop off like that. But Soliums are a really awesome tool, actually. And you can often have a look at, how different price, how its sentiment and social volume changes as an indication of what could potentially soon happen with your with different cryptocurrencies. So one to keep on the bookmark tab if you haven't checked that out before. Really easy to use. If you get super into it, I'm pretty sure there's like a premium one that gives you a little bit more information and things like that. And finally, have you seen this? We're going to bring you up something called txstreet.com. Now, this new website visualizations Bitcoin and the Bitcoin fork, Bitcoin Cash transactions into cartoons of passengers getting on a bus. Now, the bigger the character, the bigger the amount of money being sent, and if they're walking faster, that's a sign a user has paid a fee to speed the transaction. Now, TX Street gets its live data from Bitcoin.com, BTC.com and CoinMarketCap.com and other sources, and was inspired by TX Highway, which has a similar visualization focused only on Bitcoin Cash. Now, how hypnotizing is this? Oh, just watch this forever. Maybe not forever. Okay, sorry. That's all we have time for today, though. Please keep the questions coming via YouTube, Twitter, Telegram, and Facebook. And I really appreciate helping us out by retweeting and sharing the show. We'll be back again around this time tomorrow. Looking forward to it. We'll see you then. Cheers. There's the man with the hat.